your deposits yenye umesave kwa bank, ndio bank inacheza inapea gava.
Na hii wa Kenya wenye someone anachunganga bank ifungwe mapema ndio.
And that is why you've seen lots of articles that say very few people save their money in banks. Very few Kenyans have more than 100,000 in their bank. Heri pesa rotate.
And is it even rotating actually?
Right now we don't have money. So we're all suffering. But the irony is, the guy who keeps 100,000 in his account is poorer than Mama Mboga.
Break that down.
Banks like people whose accounts are always in deficit. That's the best customer. Not the guy who's holding 5 million in the account, Aisongi.
What are you saying?
The person who is likely to be given a loan by a bank is not the guy who has 5 million that's been sitting in his account for 2 years. Ajasonga.
This episode leo tuta start very differently. This is one episode that changed my mind. I usually hate, even when I'm emceeing an event, I don't do this to the people in the audience. Ati turn to your neighbor and say what. I don't like that. Linda Waiyaki changed my perspective of that because Dr. Esther Mushemi invited me for an event. Alafu guess who I was seated next to? Linda Waiyaki. So when walituambia turn to your neighbor and say something, I turned to Linda. And the first thing so nikamuuliza, we are told to find out what your neighbor does. Kasema, Linda, what do you do? Akaniambia, I start banks. I build banks actually from scratch. That one statement. Kauza, what do you mean you build banks? Akasema, I do exactly that. Alafu before tuendelee na conversation tukaambiwa tunyamaze. The event was starting. Sijaiachwa hanging hivo. I tried sneaking in conversations in between the speeches and oh Lord.
But because I was paying attention because I had to write an article about that particular event.
That particular event.
I'm actually working on a series based on the Gulf African investment nexus.
Yes.
I don't know if you read the post I wrote after the event. And I'm building a whole series that will help Kenyan entrepreneurs and potential investors and all other associated parties in how they can best capitalize on that partnership between the Gulf and Africa. And I'll do a series of articles before the conference in Dubai in November, and then I'll do a post cover as well.
We start by sending people to Linda Waiyaki's LinkedIn page. First of all, this is Discovery. I usually would introduce a guest. Niseme, our guest for this episode has done this, and that. But Linda's CV is 1 hour long. And I doubt we even have enough time for this conversation because of how good the vibes are, Aki and Ani. In fact, I can just say this is different. But I have to tell you something about Odoo, who are our partners on this show. They help us pay the bills up around, but they also have value they offer for you. Now, before I hand over to myself back in studio, wacha leo nikuchanue na njaro moja unaweza jiongeza title moja legit. Sema, I'm a senior project manager. Imagine that as an accurate title on your profile. Alafu kona app inakusaidia kufanya shughuli yako yote ya project management. I'm talking about the Odoo Project Management app. This app will help you set up a team ya kupiga kazi, track the progress of your project in every step, however long the duration is, be it days, weeks, months, or even years. The Odoo Project Management app allows you to add relevant team members at any stage of the project. Say for example, uko kwa biashara event, unaweza add staff members, alafu tena unaweza add client ama investor. Now the best part, the Odoo Project Management app allows you to add rights based on roles and responsibilities. Basically, iko na the online version ya ile kitu ya only authorized staff allowed beyond this point. Vitu internal zinaonwa na watu internal na watu external wanapata access to the relevant assets. All with the goal of making your project a success. Baka hapo tuko pamoja. Project Manager. Now get this, you can try this for yourself using the link tumekuwekea kwa description ya hii video, and you can get it free of charge, that is if you choose it as your first app on the Odoo platform. Na nikisema free, I mean free for life, and that includes hosting and support. Now that Odoo has over 45 apps dedicated to smoothening business processes, unaweza add more apps as your business grows na unazipata na bei poa. Ukitaka app ya accounting, manufacturing, a business website, unazipata zote kwa hii link tumekuwekea kwa description ya hii video. So, watu wangu wa service industry, interior designers, construction managers, landscaping experts, NGOs, changamkeni. Project management pia iko Odoo. Hakuna biashara ngumu kumanage mbele ya Odoo. Over to myself, back in studio. That said, this conversation has to start because vile nimesema, I'm not sure we have enough time
to do this.
Yes, but we'll do our best. So now, first
I can
of
put
all,
my LinkedIn profile link for guys.
Kabisa,
Later on, they can go and discover on their
we
own.
save the hour for something else.
Yes,
No,
they
very
can
nice.
go on a discovery mission by themselves.
Very nice, very nice. So to answer the question, so before we were interrupted by the event, we continue from where it all started. What does it mean to build a bank from scratch?
It comes in 3 phases. There's regulation. That's all the government laws, rules that are required that you must fulfill to build a bank.
Yes.
It's not just a building with marble floors and pretty attendants and a big vault in the basement that holds money. That's not what a bank is. So it's about regulation first.
Yes.
You have to meet the threshold set by the government.
Yes.
Because remember, you'll be holding people's money. They need to be able to know you're not utaponyoka na pesa kama GFOS.
GFOS ili change. Ilikuwa different.
But figuratively. I know, figuratively.
Sisi ni watu wa kitambo. There was a time. Yes.
There was a time everything was, the money has gone. Waliponyoka kama GFOS. Wow. And then there's the capitalization. You need to show proof that you have enough money to not only provide financial assistance and financial services to your clients, but also be able to grow their money. When they give you their money, I give you 1 bob, I want 5 bob back. Not I give you 1 bob, you go and spend it, and then you come and tell me, oh, sorry, I lost your money.
So by actually proving that you have the capital, it means you don't have your bank yet, but you have the money in someone else's bank. So you have to prove you have this.
You have to prove that the money is there to set up this bank. And then the other most important thing is you have to prove it's not proceeds from crime. The pesa Taliban.
Yes.
Okay. So there's a whole lot of loops that you have to, there's so much paperwork to fill in. But they, in the last few months, we've been working. So in my organization, that's my responsibility. They are a global private wealth bank, and they are proudly Pan-African owned, by the way, by Africans from the Caribbean and North America. And what they want to do is, you know how we've always suffered with dollarization. Everything must go through the dollar.
We've suffered through
dollarization and being controlled. You know why BRICS came about? Because people like Russia were locked out of SWIFT. They couldn't do transactions because someone decided they're not playing by the rules. So let's make life difficult for them. So what did Russia decide with a few other friends? Let's go off dollar. And BRICS was born. So we're trying to do the same for the rest. Right now, for example, a trader I love Ghana, by the way, that's because we're building some banks there, so they're like my go-to lately. So picture a trader in Ghana needing raw materials from Kenya. To pay for those raw materials, they have to do CDs to USD. Then it has to go through a correspondent bank in New York, okay? Then from the correspondent bank in New York, it comes to Kenya. From USD, converts to Kenya shillings to give to the supplier. That will take like 3-5 days. That's lost business and lost revenue from FX spreads, conversions. You pay more for paying for one thing. But now imagine a situation where this trader in Ghana places their order for their raw materials in Kenya, pays in CDs, and in less than 5 minutes, it lands in the supplier's wallet or bank account in Kenya shillings. Never touch the dollar anywhere.
It's direct conversion from the CDs to Kenya shillings. Okay. And so then, but the stability of the CD still not pegged on the dollar because if
not. Never touch the dollar anywhere in that transaction.
Then how do we do the valuation of the CD in comparison? Because is this going back to the gold standard?
Yes, it's going back to the gold standard and also pegged on digital smart contracts.
Okay.
Yeah.
Okay.
So
yes.
we're building a system where you no longer have to spend 3 to 5 days waiting for payments. Instant. Saves you money in conversion, saves time.
Okay.
And you get more value for your money. Yeah.
So,
because remember, apart from Ghana cedis, Kenya shilling, so there's always that conversion pegged against each other. So you'll be working with Ghana KES, not Ghana USD KES. You get? Like how when you cross over to the border with your 2,000 bob to TZ, buy a crate like Liamgoju. No gonna change.
Yes.
So you're doing direct African currency conversion.
Will the US allow that? Because that's a direct hit on their economy.
They are trying to, you see now with all the digital stable coins, it's why they've produced the Genius Act that went live earlier this year. It's the new law. It's basically Breton 3.0, the digital dollar. Because they've seen everyone is going
that direction.
You can't beat them, join them.
USDT stuff.
So you see, the US wants to remain relevant. The only way they can do that is by changing with the times.
So you brought up something interesting. We've had an episode dedicated to Bitcoin and cryptocurrency.
I actually saw it. Guys are paying for garbage in the hood with
Bitcoin.
Yes.
But I have questions on Bitcoin. In fact, I should just ask this right now. The only question, Bitcoin as an idea in terms, the person I respect as an authority on Bitcoin, two people, one of them can't show his face on this platform, but his friend came on. Rufus FX. FX Pesa.
Yeah, it's a tricky place to be. You don't talk much.
Thank you.
End up in a ditch somewhere.
Allah. So Rufus came and he broke down the concept to us, Bitcoin as a currency. And he said, when ukiangalia fiat currency, the biggest scam in fiat currency is Bernie Madoff. Right?
Oh, yeah.
So Bernie Madoff ran a scam for 17 years.
He's the master of Ponzi schemes.
Very nice.
He's the father,
yes.
of Ponzi schemes.
Yes. He gets arrested in 2008. Then in 2009, someone invents Bitcoin, right? So when the last activity on the account of the person who launched Bitcoin, Satoshi Nakamoto.
Satoshi is he's a mythical ghost.
Good. So the question that we have not been able to answer from my end in terms of Bitcoin is, what if Bitcoin is the same strategy as Bernie Madoff, just that in this
programmable
case,
currency.
No suspect.
There's no suspect because it's programmable and it's forever learning.
You understand?
Yeah.
That's the only gap.
So that's why for us, I focus more on stable coin that's usually backed by the government, a central bank actually. So it's the digital currency. It's called, like, for example, the e-Naira, the e-cedis, and I hope one day we'll have the e-Kenya shilling. Because, essentially money never moves.
Money never moves.
Like if I say I want to transfer $100 million from, say, US to Kenya, I'm not going to physically cut $100 million. You get? So it moves virtually, not literally. The store of value. It's not physical. Like if I tell you I'm giving you $100 million right now, what will we do? You give me your account number. We'll do an electronic transfer. So $100 million reflects in your account. But it doesn't necessarily mean that you have a warehouse somewhere or a safe that is literally holding $100 million physically in cash. Yes.
It's idea in what you see. And a joint common contract.
Exactly.
Very nice. So hii conversation tumeanza kwa setting up a bank, right? We've always assumed that people with so much money they don't know what to do with, they now set up a bank and then they start selling money.
Most rich people don't use their own money. That is the
I've heard
secret
that.
to wealth. Never use your own money to do something. Use other people's money. So oftentimes banks are set up using a pool of investors. This pool of investors, again, is someone with too much money. They don't know what to do with it. They're like, I'll lend it to you.
Okay.
Then I'll get a little margin after.
I'll lend it to you and then I'll get a little
You use
margin.
my money.
Yes.
As long as I want X% each time.
This is a different game from the Shylock.
Yes. Now this one is regulated. This is money that everyone can prove. It was built because of X, Y, Z.
Okay.
Didn't bomb someone or sell a couple of guns to some militia somewhere. This is legitimate money.
Okay.
So investors pool their money, okay? And say, here we have $300 million. We want to set up a bank. We're going to sell this money to our customers.
We are going to sell this money to our customers.
That's how you get your loan.
That's how you get your loan.
You come, you want to borrow 5 million. I've charged 18%. Someone else wants 10 million. I've charged them 18%. So that 18% is where now me as the bank owner and the investors share. Because it becomes from this 18%, probably 6% is going to cover all the processes, operational wise.
Very nice.
Have to pay steamer, employees, GMAG, internet, what? You have 12%. On the other end, remember, these guys who pulled their money to set up this bank, the capitalization, they allowed you to set up this bank.
Yes.
Then they are cooling 10%.
So you play with your 8%.
8% ni wewe cheza sasa. Now that's where as the bank you find mefungua branch in another country. They've decided to add an insurance brokerage to the group. That is how now you grow. Which
begs the question, you've played with a very interesting percentage, 18, okay? So two things. How is it that in the US, and I believe you're the best person to ask this question, Pia, one of the best people, because I've asked this before. In the US, we have a friend of the show, anaitwa Dr. Washira, used to work for the World Bank. Alituambia, the going rate for borrowing in the US is around 5%. Ikifika 6%, watu wanapiga nduru.
Kabisa.
How comes Kenya we are playing at 17, 18, and even 22% is acceptable?
See, because we have been taught to be borrowers all the time. We are beggars in Africa. What is begging? I mean, every time you go to IMF, aren't you going cap in hand to beg?
That's what affects our interest rate, like the person who
Because
goes
look
to
at
borrow.
this way, you've borrowed money from IMF, okay? You have to pay them back. So how will you pay them back? And remember, they gave you $1 million bob. They're not expecting $1 million bob back. It's $1 million bob with twins. You borrowed $1 million, it came with interest. It's charged interest. It's not free money, comes with strings attached.
Please link this for me.
It's like
someone borrows from cooperative, Equity,
bank. Yes.
Equity, our local bank. You as a Kenyan investor, it is the government that borrowed from IMF. Please link the 22% to the begging of the government.
So now, when the government borrows, who pays that loan? It's the citizens. From taxation and all other tariffs that they'll come up with to make the money to be able to pay off this. Like for example, in Kenya, I think about almost 30% of our GDP goes back to servicing sovereign debt.
And 30% to corruption, so we remain with...
Thanks. So what happens is, let me simplify an IMF loan like the way you go to borrow money from a bank. So you want to build a house. You go to the bank, take out a mortgage. Mortgage ikona interest charged. So there's the interest charged on that mortgage at whatever percent that bank has set. That is CBK plus
9.9% is a good deal.
Yes.
Yes.
They've told you it's CBK rate plus their margin.
Their margin.
Their margin is because they need to pay salaries. need to pay rent if they are, you need to pay utilities. Kama biashara tu kama kawaida.
Yes.
So what do? Of course, they mark up the interest on the loan. Then there's penalties. Each time you're late, so you're meant to pay this loan, let's say on the 5th of every month. X amount of money must be in your account, pay back this loan.
Yes.
And then remember, you borrowed probably $1 million for like 5 years. By the time you've paid it, it's like 6 times. You've paid almost $6 million back to the bank.
Yes.
Bank imekubomoa vizuri hapo. So that's what happens with sovereign debt. It's just, you just bring it down to like a person borrowing money to build a house.
Yes.
So for one reason or another, we have corruption. Pesa ilikuja ya kujenga whatever infrastructure project it was.
1 billion, for example.
1 billion came in.
Wameuma 400 million.
400 million imekuwa bahasha ya mzee.
Yes.
Imekuliwa hapa pale.
Yes.
Then you didn't even do due diligence properly on building these projects.
Yes.
So the project has problems. It's eating more money than what you borrowed. You borrowed $1 billion to do a project. Mshakula 400, we have 600. But then you find
needs 2
because
billion.
the project was not structured properly, it actually needed 3 billion. So what do you need to do? You go and borrow from Paul. So you already borrowed from Peter. Now you go and borrow from Paul. Sasa umejingisha kwa madeni times 2. Because now, apart from augmenting the hole in the project, you still have to pay Peter. So what are you doing? You're using Paul's money to pay Peter. So what happens when Paul needs his money back? You go and find Joseph to give you money. And you end up in a perpetual cycle of forever owing people money. You'll always owe people money. Because you didn't plan yourself properly.
So that's fine. Pakapo nimeelewa. So when they raise taxes to cover the money
they are trying to cover the whole of Peter, Paul, and Joseph's debt that is now choking them. You started with $1 billion, but because your project was not done nicely and you were in a hurry to make money, mkakula 600, you're short 2B. What did you need to do? You borrowed from Paul and Joseph to cover this 2B hole, plus the accruing interest because you're late paying on this other side. So there are penalties. Your loan was probably at 10%, but each time you're late, there's a 10% penalty fee. Sasa unalipa 30%.
Sawa, mpaka hapo tuko pamoja. So now for the borrower, wa mimi ninaenda KCB. Government ili deal na IMF, wame raise taxes. So government nikienda, when I go borrow $1 million, $2 million or $3 million from the bank, the effect ya kupandisha.
My interest ni because a little of this has to come back this way. Kusaidia serikali.
What about this argument that when government floats bonds, right?
They are trying to raise money to sort out their bills.
So when they raise money, they actually borrowing from banks.
They borrow from commercial banks.
Yes.
So ni pesa yako, your deposits yenye umesave kwa bank, ndio bank inacheza inapea gava.
Na hii wa Kenya wenye someone anachunganga bank ifungwe mapema ndio.
And that is why you've seen lots of articles that say very few people save their money in banks. Very few Kenyans have more than 100,000 in their bank. Heri pesa rotate.
And is it even rotating actually?
Right now we don't have money. So we're all suffering. But the irony is, the guy who keeps 100,000 in his account is poorer than Mama Mboga.
Break that down. The guy who has 100,000 in the bank.
Than Mama Mboga.
What does that mean?
Mama Mboga does more volume in trades. It keeps her money circling to help her. Picture wa mama wa chama. Table banking is the best example.
Yes.
Table banking, if you need a loan, trying to go to your bank, you must have history. And a lot of people in the rural areas are unbanked.
Yeah.
Not everyone. Until equity, most people were not banked.
Very true.
M-Pesa came to save people. I mean, I have a bank on my phone.
Yes.
I have a full history, like I own a bank. when you want to borrow money from a bank, you have to do what? CG 12 months bank statements.
Mm-hmm.
You have to show your credit worthiness.
Yes.
Mama Mboga she didn't have time for CG audited accounts.
Mm-hmm.
So of course, she will
Yes.
not get money.
Yes.
She's not bankable by commercial bank standards.
Yes.
She does not have a credit history.
Mm-hmm.
But guess what? When she goes to her chama, because these guys know her credit worthiness, they know she buys mboga from Marikiti. If we give her 20K on Monday, by Friday, it's back with interest.
And doesn't this lock her to a certain level of the finance system or the hierarchy, that it's very hard for her to push 2 million without getting into the banking system?
And that's our problem, because our banks here are risk averse. Here, banks very rarely give you money. You have a kick-ass project, PowerPoint deck on Flick from Canva, you've done your presentation, given them use case scenarios, they tell you what we'll discuss in Mancom. And they come back and tell you,
They don't even discuss, they just give you time to make you feel like they're discussing.
Oh my God, they're discussing my project. You start making plans. I'm going to get this 10 million, I'll set up the business, I'll do ABCD. And then they send you, we regret.
You say, it's
so
very
now
interesting.
Abroad is different. It's easy to set up businesses abroad. Like, remember I worked in a bank. I worked for Australia New Zealand Bank.
Mm-hmm.
And we had a whole division where their job is to call customers and tell you, listen, your credit history looks good. We want to give you money. Now you figure out what you want to do with it.
No, after they call you, they want to give you a car. I swear to God.
A car is a depreciating asset.
And
give me money to build a business. Don't give me a car.
You know what's interesting about what you just said?
Yeah.
Another friend of our show, Robert Mwangi, one of the most brilliant Kenyans, kama wewe, that I've ever met. And Kenyans are about to discover you. Proper. Robert alitupatia idea moja. Yeah. He sent me an article. I still have it. I just opened it. Akasema ati the Kenyan finance system is geared towards risk avoidance.
Yes, we're very risk averse. Not just Kenya, but African banks are risk averse. Abroad, banks are willing to take a risk on you. You came with your PowerPoint and told them, oh, I want to make convertible high heels for girls. One shoe can change. It's actually a business now, which is making bank. So it's like, instead of most girls, you leave the house in high heels, looking good. A few hours later, like, lakini nimechoka na hizi viatu, I wish I had flat shoes. What do? Unaingia kwa handbag, unatoa ballet flats, unatoa high heels, unavaa. She created a very interesting shoe. Same shoe can change heel heights. Can go from stiletto to flat in seconds.
You can walk into a bank with that proposal?
Yeah, and get money. She got funding to do it. You try doing that in Kenya. Ati viatu inafanyanga nini? Hiyo tu si ni ya wamama. Let me put it this way. In Africa, the way we've been taught, we're very rigid. We like to think inside the box. We don't like coloring outside the box. So we're not willing to take risk.
Let me be the devil's advocate on this one, kidogo. Is it a question of the banks are situationally aware in terms of like how Kenyans themselves, the customers, would respond to ideas?
Not really. It's because they can't afford to play with the money because it's customer money. If you lent this guy kunywe maji, the bank is liable.
Abroad, it's not customer money.
No, there's a way they structure their funding. It's diversified.
Okay.
Here we're very rigid. Then that's why our banks prefer to do business with Gava. But they're slowly changing that and focusing on SMEs as well.
Yes.
Yeah.
Your story starts we had a different episode before we came here.
Yeah, we had another.
Yes. You were a bank teller at 18.
I used to clear checks.
Take us through how that happens. Ndio sasa tuingie kwa your experience as an investment banker. How does that happen? What does that look like? And tuanze na, how does that happen?
So for me, it started out from having a conversation with the right person during the student career fair without knowing.
For everyone listening, what does a conversation with the right person during a school career fair mean?
Just taking an interest in potential future employers. And it was just a conversation with an individual who worked at the investment desk then at Australia New Zealand Bank. And I was just curious because of a school project I had on investments.
What was your school project?
It was on building a business that actually makes money.
You had a project,
school project that was, yes, that was supposed to actually be run like a company. Like you get the experience of running a company with your classmates. You put in teams and you're told, for example, you're going to build a company that manufactures spoons.
Yes.
So you have to do the whole process for researching what's the best material to make these spoons? How are we going to market these spoons to make money? And how are we going to scale so that we don't have just one store but many stores?
Scaling. At this age, you already know about scaling.
Yeah, it's school projects.
Okay.
So during the career fair, they'd bring different corporates from different industries. And for me, I've always loved maths and numbers. So of course, I gravitated to all the finance guys. I'd taken note, Kenya in advance, which companies were coming for the career fair. And I'd mapped out, I'll make sure I talk to guys from this company, this company, this company, this company. Because you never know, that's where your opportunities will come from.
Yes.
Because out there, you actually get scouted for jobs while you're still in school.
To date?
Yes.
Other guests we've had on the show, Nasema, kama we've had the former group CEO of Nation Media Group. Yeye alituambia at the time they used to be scouted in school for jobs, but not presently.
No, abroad they still do it. You find your best talent in the classroom.
Is it similar to what Equity is doing with Wings to Fly, where they identify bright students and take them through school and actually employ them?
Yes. So now this is something inbuilt into the Australian education system. They always have career fairs every semester. And they usually have them for each faculty. So the business faculty, medical faculty. So, you know, that dream job we've always wanted, like job shadowing. That's how it starts.
Kwa hivyo hii kelele ya child labor ni huku tu ndio tuko nayo. They actually give opportunities.
That's why you find, like, you'll be talking to someone, they tell you they have 27 years of experience and they're like 40 something, you look at them like.
People wait to graduate from campus. Yeah, you wait to graduate
campus to go look for a job.
So
there you start learning the importance of money as a teenager. I told you, you've seen it in movies. At a KFC drive-through, the person serving is some high school kid.
And they get paid?
Yes. It's not free. You're earning a salary. You're in high school, but you have a salary.
Hapa, university graduates, we are struggling for them to get paid.
Yes.
They actually qualified. Huko unasema they start training you.
You start early. Watch Australia. Japan, you start from kindergarten.
Unajua,
by age 5, you're uko at the, what's it called? What's that car, that big car company of theirs? Not Mitsubishi. Yeah, the kids have gone. Imagine your grade 1 students have gone on a field trip. They've gone to learn how to assemble engine parts for a car.
One of my friends actually told me that it's only in Kibra. I think it's Oyo, comedian Oyo. He told us that it's only in Kibra that they practice your identification and programming of children in careers from kindergarten age.
Yes.
But it's not like in practice, but it's in branding.
Now in Japan, it's in practice.
Uku Kibera
they even cook for themselves. Here, when your kindergarten baby, one to you, you're told, OCG, today she cooked. You want to go and kill the teacher. You want my child to be banned. Yeah, they cook their own food.
You will kill us.
Do you know they make their own food? They clean their own classrooms. Like they do everything for themselves. They even have banks for kids where adults are not allowed. You stand outside. Your child goes in, does their banking, their ATM card, they balance their bills, etc., pay what, their savings move from A to Z, and then they come out and their parents pick them up.
We should emulate Kibera, but in practice, Kibera ni branding. Engineer Ochieng, Engineer Otieno, just branding, but not doing.
But now then
can we change that?
Practice. Yes, we can. The problem is here we get to, oh, that one is a child. Have you ever tried to do something and they tell you you're still a child? You should not be thinking of doing such things.
Yes.
You're stifling me from growing. Then they let you learn in practice. So by the time you're finishing high school abroad, you've had a job for a few years. So you've built your credit history.
They count that.
So you built your credit history, and that's how you'll find at 18 you can qualify for a mortgage. You find an 18-year-old going to college, has a house, has a car, they have house payments, they have car payments. They know how to manage money. Here at 18, mommy is still giving you pocket money. She still pays for you to go to the salon. When you want to go out with your friends, mommy and daddy have to give you money to go buy drinks.
At 18, when you get your job, for you, yourself, what you are excited? What is your relationship with money? I was bad with money at first. Oh, you were bad at...
Oh, I bought every shiny thing. So I have a weakness for shoes. Up to today, I have a very, very serious weakness for shoes. Okay. If I see a shoe I love, I'll buy it in every color they have it.
Every color they have.
So at first, I even used to buy shoes, lipa mdogo. I'd buy shoes, lipa mdogo. Cute pair of boots, they're like $2,000. I know that will take me like a month to pay for every week. Because you know, paycheck, remember abroad, it's not like here where you're paid at the end of the month. There, it's per hour, so your salary, you know how here, there's that week where you're broke. Hatuwezi kula indomie. The way you're you don't have a coin. Now abroad, because of how they pay, Wednesdays was the day you were broke. That's the day you go to look for those coins that fell on your couch, so you can go eat KFC. KFC out there is when you're broke, not like here where KFC is for middle and upper class guys. Their KFC is for the guy who's broke. Organic food is for the rich guys.
Robert Mwangi told us that pia.
Yeah.
Nasema if you want to know a poor neighborhood, angalia mahali wameplant KFC.
KFC, McDonald's, Burger King, and then they'd stuff your mailbox with vouchers. In fact, that's where my love-hate relationship with fast food came from. Ilanichafanga roho. I can't eat KFC.
Yeah. Fast food.
Fast food.
Yes.
Heru nipe ndoma. Give me some ndoma, give me some steamed chicken. Don't give me fried chicken.
Yeah.
Up to today, like now for me, I have such a bad relationship with KFC. No offense to KFC, by the way. But it gives me a running stomach.
Okay.
Yeah. So fast food abroad is for when you're broke. So remember, your salary is paid Thursday at noon.
Imesha check.
Kwa account. So the first thing you do is pay your rent. Rent is per week. See, per month. Everything is paid weekly. Rent is paid per week. The only utilities you don't pay for weekly is like electricity is paid twice a year. You get your electricity bill every 6 months, water bill every 3 months. Wi-Fi is free everywhere.
Good internet.
I mean proper broadband.
Free everywhere.
Yes. But then you also have your paid one that's connected to watching your shows, your TV.
The free one.
But everywhere else, like
because you can't walk around with your TV. You can't be that cheap, sindio?
You can talk around.
Wacha nitoke nayo hapa nje. Hapa ndio kuna network.
Hapa ndio network. You know?
Yes.
So the whole thing for network in public spaces is not a new concept.
Okay.
It was there from kitambo.
But you pay rent weekly.
My friend, landlord expects
those
rent.
landlords must be super impatient.
Friday, akuliza, I didn't see your rent payment in my account yesterday.
Oh.
When should I expect my rent payment? Yes.
That's too...
And
Okay, but it's not too much pressure if you plan yourself. And
if you plan yourself, so you know, let's say, for example, you're earning $2,000 a month, right? Your rent is $300, no, $2,000 a week. Your rent is $300 a week. You know, you have groceries, it costs you like $50 or $100, depending on whether you're a fast food or organic eating person. And then you've got your entertainment.
Food uko pia ni kama sexual orientation.
Yes.
Kuna watu wa organic, kuna watu wa
organic. We have fast food loving obese people. Guy who cannot live without eating 4 McDonald's burgers in a row.
Yes.
Back at their family meals.
Yes, they know the packages, yes.
Then you have the guy who's vegan, just eats twigs and that.
No, sasa yeye unaongea vibaya.
No, I'm
twigs, as in.
No, I'm just making it fun. You have the vegans, then you have the carnivore guy who if it's not meat, it's not food.
Okay.
There's no meat in that. There's no food they've eaten. And you have your pescatarian person who only ever eats anything from the sea. All they do is fish, but seafood, not river food.
Okay. Oh, sawa. So now you plan yourself based on...
You plan yourself based, so you know you have to pay rent, it's X amount. You have to buy your food. You have your transport. But transport here is another interesting thing. I rarely ever paid... I liked using public transport because it was very convenient. Picture, I buy a ticket in the morning. I'm going from Lavi to town. I bought my ticket. I used the bus. My ticket, by the way, is valid for a few hours. So let's say I left Lavington at 7 a.m. I went to town, but I was done by 9. The same ticket I bought to come to town, I can use the same ticket to go back to Lavi. I don't have to buy another ticket. And I don't necessarily have to take the bus. I can get on the train with the same ticket or the ferry.
That's an efficient system.
And if you live in... So they had sections called free transit zones. These were residential suburbs that were close to the central business district. So it was called a free transit zone. You know what that means? If I'm going from my house to the office, it's free.
But if you're going from your house to the
office, long as it's within the free transit zone, I can take the bus, I can take the train, I can take the ferry, and it's free.
How do they make money?
It's zero bob.
How do they make money?
Because they have all this other long distance. Because the fare is by zones. So the farther I go, the more I pay.
Okay.
So there's that area where it's free.
Yes.
And I don't have to walk also. For example, let's say you're in town. You work at, I'm very bad with buildings in town. You work at Nation Center.
Yes.
You need to get to Pension Towers. Yeah? Don't have to walk. There's something called the Central Area Transit System, the CAT bus. And it comes in 3 routes that all interloop and connect the whole of the CBD. So there's a route that takes 3 minutes, there's a bus every 3 minutes, every 4 minutes, every 5 minutes. So I can jump off, at Nation Center, I'm going to meet someone at Pension Towers. It's 2 p.m. I tell you, I'll see you in 15 minutes. I'll be there in 10. Because the minute I get downstairs, there's literally a stop for a CAT bus right there. I'll get on the bus to go and drop me at Pension Towers. And they're bus lanes, so they're never stuck in traffic. There's dedicated routes just for buses. And nobody drives on them except buses. And then there's a dedicated route for emergency services. So you don't have to pull to the side, CG, the ambulance needs to pass. And if you get on either of those lanes and you're not a bus or an ambulance, you will be fined. They don't joke.
It's proper efficient systems.
And it's even different. It's marked, it's usually red tarmac.
Okay. Or they tried with BRT, and then whatever happened to that project. You say you were not good with money when you first started working.
I used to buy shoes.
You buy a lot of shoes.
They told me I used to leave and do lipa mdogo mdogo.
How do you reset?
How do I reset? I went for a course that taught me the value of money. Because I noticed I was spending on frivolous things. I was always broke.
But you've been trained from our other personal podcast. You've been trained on money from when you were a child.
Yeah, but you know, there's that excitement. The one trained, your mother is controlling it. She keeps it for you. So you see, you've learned the importance. You know there's money you're saving.
Yes.
And then she'll give you a little bit at a time to spend. Now,
It is
on
not
this
you in
other
control.
side, the rails are off.
It is you.
It is me. So by the time I reset, I was like, I went off the reservation. I had more shoes than space to store them in.
You moved out for your shoes.
Actually, I had the whole room with shoes, even up to today. I still have that weakness for shoes, but now I've learned to put it in the budget where I restrict myself.
So the cost.
Yes, I restrict myself and say, you see, there I've budgeted, I've rent, I have food, I have utilities, I have entertainment. I have my little nest egg just for buying shoes.
Just for buying shoes. That's your service to humanity, new version. So what happened for you to feel the need that I need to do something, like for you to really need to take the course? Because
I went hungry.
You
I spent the money for buying food to pay for shoes, and I didn't have food for a week.
Allah.
And then remember, you live abroad.
You didn't have food for
a week. And remember, you live abroad. So it's not like you can call mom and say, Mom, I'm hungry. She says, let me send you a basket of goodies from the house, my friend.
Yes.
When I mean I went hungry, I actually lifted the couch to collect all the coins. I hunted for all the coins that were in random places in my house. So I could eat at Hungry Jack's. I mean, for $2, I'd get a full meal, burger, fries, drink, desserts.
Oh, so going hungry is eating unhealthy food.
Yes.
It's not like hungry.
Not hungry for drinking water and going to bed on an empty stomach.
It's not fasting due to unavoidable circumstances.
It means being forced to eat fast food, where you eat that KFC chicken with coleslaw.
Oh Lord. Oh, levels.
Because that's you can't afford to go and buy fresh fish and vegetables to eat. So you're forced to go to Hungry Jack's, which is the Burger King equivalent in Australia, or go to McDonald's, where you could have a meal for $1.99. Burger, fries, fruit slices, and a drink.
And that 1 week, recheck.
That taught me the hard way, my friends. Have you ever eaten while crying? Because the food is so greasy.
No,
yes.
Mine is different. I have cried while not eating. For not eating. Have you ever eaten while crying? Oh Lord.
I was traumatized. I traumatized myself that whole week. My skin was a mess because of all the greasiness, the oil, Yes. My stomach was a mess. I was just depressed from having to eat. However, thought like, oh God, I have to eat.
Oh Lord, I have to eat.
And you're like, I wish I had a bowl of oats right about now.
Yes,
that was me. Yes. I was like, I never want to go through that again. I'm a foodie, so if I'm not happy with the food, I'm depressed.
So that was a wake-up call.
That was a wake-up call. I was like, I need to plan myself better.
And that worked out for you.
Yeah. So I did an internal training course that was offered by the bank I was working for at the time.
Oh, they had the internal training course, but you had to get the wake-up call?
I had to get the wake-up call of I never want to be forced to eat fast foods.
First of all, thank you. So tulikuwa hapa kwa you start as a bank teller. You have a degree in architecture. Very different path from finance. Ni gani ingine tena tulikuwa tumesema?
Oh, I'm a CFA and I have a master's in financial engineering. And I'm in school right now learning artificial intelligence and business.
So where does architecture come in all this?
I liked drawing. I wanted to be a fashion designer. My mom refused. Architecture was the closest thing.
Architecture was the closest thing
I
that
could still
allowed you
draw.
to do what you love.
To draw.
Okay, but not that you will practice as an architect just because.
No, after I finished, I was like, you know what? If I ever want to set up an architectural firm, I need to be able to understand how the money is moving.
Yes.
When I'm paid by a client. How do we efficiently use the money to make sure we deliver projects on time? So let me go back to school and learn this. And then I went back to school and discovered, hey, actually banking and finance is actually more fun than drawing things.
It's actually more fun than drawing things.
And I pivoted and did a full 360 degree
into finance.
And completely switched to finance. I found my calling.
So kwenda huko architecture.
It's a piece of paper somewhere. Inakwanga line kwa CV.
Ni line tu ya kusindikiza.
From this year to this year, this was done.
This is what I did with my life.
You know, yes.
Okay. Now for finance, what does the journey look like for you to get to investment banking?
Oh, wow. This again stems from ending up being recruited by ANZ Bank. So ANZ, Australia New Zealand Bank.
Okay. Australia New Zealand.
So I started out as a data entry operator. And you know, most companies like to promote from within. So I literally rose up the ranks in the bank. I worked for them for 6 years. And at one point, it actually, my experiences during the day in the office are what inspired my trajectory into investment banking. Because I'd sit in a meeting and we're discussing something. Then you go to class and the professor is now giving you the textbook version. You're like, oh, wait, hey, we actually did this in the office today. And I'm like, so that's how they connect.
Yes.
So for me, I sort of kind of had a cheat sheet for school because I was living my classroom experience.
Okay.
Yeah.
Yeah. There's an example we were talking about in terms of investment, okay? And in terms of unlocking opportunity. There are people who view Africa. We also have another episode where we featured Waiyaki. Very, very good vibes. She moved from Germany to Africa. She's big on Airbnb and real estate. And she says she sees opportunity in Africa. And there's something about people who see opportunity in Africa.
We have so much opportunity here. That
break that down in Linda Waiyaki terms.
So that opportunity is what led me to come up with a very interesting perspective. So my current place where I thrive professionally, they decided, they've had this plan for 20 years, that they will venture coming back home. You've seen how all these African-American guys are coming back to find their roots in Africa, like where my ancestors came from. And so this group of people has always had a passion to come back and find their roots. And they're all financiers. Like they've been in finance, like our global boss has been in the finance industry for 55 years.
You have tasted the concept, the relationship between time and money.
Yes.
Wameisikia proper.
Wameisikia vizuri. So he started out as a SACCO.
Okay.
And he grew it over time, and it's now a massive private wealth bank with presence in the United Kingdom, North America, South America, US Virgin Islands, the Caribbean. The only missing links were in Eastern Europe were Middle East, Africa, Asia. Yeah. So how they found me, actually, I'd actually thought they were hooks. The way they found me.
Yeah.
I didn't go looking for them, they found me. So in my line of work, I'm always trying to find solutions for problems. So there's a concept that we built. I won't give the specifics, but we've built a system that will help small SMEs. I can't share until it goes live in January. So we've built a system that helps small entrepreneurs and medium-sized to unlock capital. What's the biggest problem we have here? Especially with the procurement system, AGPO, ETC Youth, and PWDs. They get awarded these contracts by these anchor clients, but then they don't have the financial muscle to service this
Even LPO
procurement
financing is a
contract.
problem.
So what happens? They borrow from the bank, right? Or the Shylock to do this gig. But then remember, this client you're doing for is not good. It's not like, oh, they wanted mobile phones, you've delivered today, they'll pay you tomorrow. You have to wait, depending on their payment terms, 30, 60, 90, 180 days to get paid.
Mm-hmm.
So what happens? Remember, you borrowed money to do this job. So you borrowed $1 million, you did your markup, you know you'll make 1.2 M when you get paid. But then by the time you get paid, your 1 million plus all the interest it's accrued at the bank is not 1.4. So what happens when you get paid?
You're almost...
You still owe. You've done zero work. You owe more than you made.
Nimechanganyikiwa hapo kwa 1.4. So you borrowed $1 million.
You borrowed $1
million.
million.
Yes. You hope you'll make one.
You'll make
yes.
1.2 when you
didn't
get
make the
paid.
1.2. You didn't make the 1.2. You're deep. You're in trouble for 1.4.
You're in trouble for 1.4. Remember, you borrowed the 1 million from the bank
right,
to do this job where you've planned yourself. You know you'll make 1.2 when they pay you. So 200 takwa yako ya mfuko. Utarudisha 1 million kule uliomba. But then, because these guys didn't pay you on time, penalties may accrue, it's reached what? 1.4.
Yes.
So now that 1.2 you are making will go to these guys and then you'll still owe them. So what happens? You're in a hole.
Negative 400.
So now you start borrowing again. And you fall into that hole we said for robbing Peter to pay Paul.
Yes.
So this system, what it does, it's built on the preset. You've watched Shark Tank, where guys come pitch the idea, and investor A tells you, I'll give you $1 million
for a stake
for
percentage.
X percent.
Yes.
Or I'll give you 1.2 for X percent or whatever.
Yes.
So in this case, how we've built the system, it's in partnership with the Nairobi Securities Exchange. That part I can tell you. I won't tell you who the first anchor client is.
They've called me. Actually, I went for training at derivatives, and I believe... okay.
So it's called the Invoice Marketplace.
Invoice Marketplace.
So what will happen is the anchor client links their system to NSE. So you as the supplier, you've supplied phones, right? You don't have to wait 30 days, 60, 90 or whatever, 180 days to get paid. As soon as tomorrow, once they've given you your final paperwork saying you've delivered the product, it's in order, we're good. So now wait for payment. So you go onto the system, you log in, you create your account, you put in your details, and then when now you come to the part for uploading your invoices, it automatically links like Google autofill to this anchor client and pulls all the data about your approved invoices here. So now you, depending on how desperate you are or how fast you need your money, you select either one invoice or all of them. You throw them on the marketplace. Then the investors come. These are guys with idle cash.
Hey.
Investor one looks at your invoice. You need $1 million, Bob. Tells you I'll give you 900K. Option 2 is I'll give you 850 or 800. So depending on how desperate do you need the money, how much are you willing to give up to get paid now? You select the investor who's giving you the best terms. You're credited. You continue your business. 30, 60, 90, 180 days later, when this other anchor client is ready to pay, the money will be settled into a custodial account that will pay the investor, not you.
But you've burnt up, if you had charged, if let's say you're
there at that point.
You need $1 million, Bob. You need $1 million, Bob, to make 200K on top, right?
No, I'm giving you an example of when you're getting paid. Like to get paid early. How much are you willing to lose to get paid now? So it's better.
But you've not won because I'm an mistake because sababu. Let's say for example, your spend for that business is $1 million.
I should have put it higher. So I was just using it as an example. So let's say let's go with this example of you're making 1.2, right?
Yes.
So you've put this 1.2.
Anything above 1M, but below what the investor
the investor should pay you.
So if you're willing to take 1.1
now, then wait for 1.2 later.
That's brilliant. Now that makes sense.
Yeah. So if you're willing to take 1.1 now, rather than wait 6 months from now to get 1.2.
You still made a profit, but you made a profit now.
You made a profit now. It may not be as much as you wanted, but remember you are able to return your 1 million without going into debts.
This solves the concept. How does this tie to the concept of time value of money? hypothetically, if you take 1.1 now instead of 1.2 in 6 months, right?
In that 1.1 now will help you make more than that 1.2 you were waiting for in 6 months. In that 6-month period, you could have landed another project.
Yes. Yeah, makes sense.
So you'll have made more money now than waiting till then.
And does this work also with government contracts too? Because I've seen people waiting for money for 2 years.
Well, so the system for now is geared to private sector only, just because when the investors don't want to wait 3 years to be paid by government.
So now,
so that's our problem right now.
Thank you.
Pending bills are still, that is a tricky.
So for a business,
it would work perfectly if we can guarantee that the government will pay on time. But there's no guarantee. At least with a corporate client, you know for sure they will pay.
What's the business case for corporate organizations as a business? And I would like to understand this, for you to deliver services and then they will pay you for 90 days. After 90 days.
They need that money to run business. They need that money to make more money.
But they need your services now.
They need your service now, but they don't pay you now. Because they need to make full use of your money. It's like, so corporates use money the same way banks do. Your savings, fixed deposits. You come, you put your 2 million, you say you lock it for 2 years. Then I tell you, if you come before 2 years, any interest you'll have saved, you've lost. It's the same concept as a fixed deposit.
Yes.
They use the cash flow for operations.
So
those operations will help them generate more money so that they have the surplus is what they used to pay you. They use the money to make more money, or rather they use your product to make more money so that they can pay you.
So how does
it comes back to wealthy people? Never use your own money to do business. You use other people's money. So in this case, they are using your products, right, to generate revenue for themselves. Once they get that revenue, then now you get paid.
They pay you after they've used your money properly or used your services properly.
Kabisa.
So is this sustainable if everyone applied the same concept? If nobody used their own money? Would we run out of people wakutumia pesa yao?
That is why it is restricted to the 1%ers of this world. Everyone else works to live. And then here's the thing for other people. Wealthy people don't buy things for the sake of buying things.
Don't buy things for the sake of buying things.
As guys live in debt. You have a salary of 100K, but you're renting a house for 60K. Does that even make sense?
No, it doesn't, but we've done the math on this show.
We always live on credit. Poor people live on credit. Rich people don't.
But if they don't use their money, it means they are using
They're
credit.
using your money. You who's on credit. You umeomba. You wanatumia. When you're punda, you're working for them.
No, sir. Wait. They borrow to invest.
Yeah, they borrow to invest.
But see, that's credit.
And grow. Yeah, but they borrow with plan. They help each other. Yao ni kama table banking. I come to you, I tell you I have a business deal. Tell me, oh, I have a lose 10K. Chani kwekele hapo. So within my network, I've collected money. I didn't go to a bank. I didn't go to an institution. I got from my friends. That's how they play.
And
we borrow from each other. We invest in each other. It's called Keiretsu. Keiretsu. It's a Japanese form of doing business that's applied by the 1%ers of the world.
Whoa. So,
where we all help each other without needing external help.
And I've seen that work. We've talked about that. Then, Basi, what sets us back is culture. We don't trust each other that much at a certain level.
Yeah, and I've experienced that as we're doing this project.
Zero trust.
Zero trust, my friends. Where I'm explaining, I've given you proof. This is who regulates my money. I want to bring it in to invest in your business to grow it. But you're still putting stumbling blocks in my way to me giving you this money. You're the one with the need. But you're frustrating me before you accept my money.
We've had that conversation, but I'm told that most people would be wary of funding like that, for example, because it's very easy for you to be knocked off your business.
Yes, but for us, we subscribe to something interesting. When we do, like, for example, if we're not setting up a bank from scratch, we'll buy into an existing one, but we won't take it all over. Because what happens, for example, you've built a bank for 40 years, right? I've bought 100%. I don't have a guarantee. What will your customer do? They trust you. They don't know me. They'll run away. I'll be left with what? An empty shell.
So what that's why you just buy a slice.
What we do is we have a marriage. So I come in, I take X%, always the majority share. We leave for you your legacy, and we ensure for protection it's non-dilutable. So whatever we do in the future, if we float more rights to increase their shareholding because we want to grow the business, your shareholding never dilutes. It's because you're the vision. You're the reason this entity has been around for 40 years. So if I kick you out...
Another thing, before we talk economic ideas that would probably unlock potential, the Kenyan market, when we talk, say for, you gave me an example, how automated systems are outside Kenya versus
here.
Yes.
And how our life is simple.
Thank you.
And life is hard out there.
Thank you. So the example that really rocked me, Kwanza, was the petrol station.
Oh yeah, I can explain that one again.
Please, yes.
So I bet, I'll throw this to the audience watching. I bet none of you, if you went to fuel your car today, if you went back to that same gas station, I bet 9 out of 10 of you will not be able to pinpoint the actual pump attendant who fueled for you earlier. Because most of the times you drive in, you don't even look at him. He's here like, Niekel Fumbili, you've not even looked at him. Then you'll either till.
Yes.
Or the only time you'll probably have facial interaction, it's probably not even him, it's someone else. His manager will come with a PDQ, you're swiping your card.
Or to confirm that you've paid.
Yes. Ama you're paying cash, sometimes unarushenga hivi. Umefungua dirisha hivi. You've not even looked at him. Now out there, most petrol stations have one employee.
A whole petrol station.
Doesn't
matter how big it is. It has like
6 pumps. It has a shop. Tire pressures, what?
Doesn't matter how big it is.
He's seated in a little cubicle inside the convenience store. He's got screens that can see every single pump. So if you're paying cash, you drive in, park your car at the pump you want to use, walk yourself into the shop, go to the guy, tell him, I've parked at pump 4, I want to put $50. You pay, he unlocks the machine. You walk back out, you go, plug in, key in, fills your gas with your $50. If you're not paying cash, you have either a fuel card that you top up, like a prepaid card, or you have your debit or you have a credit card. The pump itself has those slots inbuilt. So you plug in your card and you put in the amount you want to fuel. While the car is fueling, you open your front, check your water, check your oil, There's no attendant to do it for you. Check your tire pressure, it's you. Clean your windshields, it's you. When you're done, you drive away.
Then now, my argument was, in a Kenyan situation, when you play that scenario, the first reaction is panic. Yes.
They'll revolt.
It's panic because it would mean taking away people's jobs.
Yes.
Right?
They will revolt.
So does it mean that sometimes we have jobs that are there? What happens to the other people who could have been working as petrol station attendants?
They're doing a better job than being a petrol station attendant.
So,
because they have the opportunity
So is this to say that we
are a very young economy on the continent. Remember, our median age is 19. But if we play our cards right, in the next 30 years, we'll be a global force to reckon with.
If we play our cards right
in the next 30 years, especially if we are serious about the African trade, free trade continental zone, thank you. We'll stop being 55 different voices, will become one voice.
See, I hear that's what got Gaddafi chewed. In some circles.
That is why they are all coming for Traore right now. It's saying he's a terrorist, blah, blah, blah. Look at what he's done for his Burkinabe people in the few years he's been in office. He kicked out the French. The resources are now being used for the people. Free healthcare, free education.
How practical is that from a resource perspective? Paint us a picture. Unajua tunasema I watched a documentary on Liberia. Liberia is among the top, if I don't get it wrong, top 2 producers of rubber in the world. And rubber means,
but look at how poor they are.
Yes, when you see tires, exactly. Kila kitu rubber probably comes from Liberia.
Because what is the problem? What's the biggest problem we have in Africa? We export raw. We don't value add. We export it raw for somebody else to process and then sell it back to us. When we could have done it ourselves. Like I gave you an example. Picture, let's say fashion, apparel, right? Cotton grown in Lesotho. They make fabric. It comes to Ethiopia. It's made into garments. Kenya is responsible for marketing and exporting it to the rest of the world. What have we done? We didn't export raw cotton for China to go and make fabric, then stitch clothes and sell them back to us. We are selling a finished product. There's more value in selling a finished product than a raw product. I gave you the one for cocoa for Ghana. Ghana is one of the largest growers of cocoa in the world. Switzerland is best chocolatiers in the world. The raw product comes from Ghana. So $300 per ton, I remembered the math, for raw cocoa exported to Switzerland to make chocolate.
$300
per ton of raw cocoa, okay? And from that $300, remember, the farmer who actually grew this thing, back-breaking, got a fraction of it. Who eats the most of it? The middleman who's brokering the deal to sell these raw products on the global market. So this cocoa lands in Switzerland, makes you some nice Switzerland dark chocolate, white chocolate, whatever. It comes back to Ghana at $25,000 per ton. Will the farmer be able to afford that finished chocolate?
$25,000
versus $300. So imagine if instead of them exporting, they grow the cocoa, then export it for somebody else to process it. Imagine if Ghana grew the cocoa, they have their own factories that process it, make this chocolate, and then it moves, maybe it's branded in Kenya or whatever. You know, like how shoes are made, upper sole made G in Kenya, lower made from where then you assemble one thing, you create a shoe. So imagine Ghana grows the cocoa, then there's a processing plant in Ethiopia or Tanzania or wherever. They process the chocolate, then the additives, like maybe some interesting macadamia nuts that come from Kenya, that they came to that factory. So everybody contributed to making the end chocolate bar. Those raisins, G from Malawi, macadamia nuts from Kenya, peanuts from TZ, they were all taken to the Ethiopian factory. See, the African countries have added value to these raw products. Then now you sell it to Switzerland stores at that $25,000. Instead of them selling it back to you, you've done it yourself, you sell it to them instead.
Which begs the question, in your interaction, my experience in the investment banking circles, how viable is an idea to pull people with resources and set up a coffee manufacturing, a chocolate manufacturing factory in Ghana so that you export?
Just political problems. Politics is what kills us. Because we have 55 little fiefdoms. We are not one voice.
That's why we can't have a tire manufacturing factory in
Look
Liberia.
at cobalt, man. You have cobalt is in our phones, our cars, it's in everything. Comes from DRC. Look at how DRC is today.
And someone actually put it plainly, I think it's Thomas Sowell still, where he said that having resources is different from knowing
how to utilize those resources to gain the most value from them.
Could it be the comfort of lack of knowing what the true value is? Because take diamond, for example.
How we've been pre-programmed.
But what if
colonial mindset?
Colonial mindset. What of this variable that the value is mostly manipulated scarcity in this sense? Kama gold is not that scarce.
Gold, we have so much gold on this continent.
So what if the developed countries look successful? Yes. It's not about the resources, it's about the perception created.
Yes, they create the perception that remember what I said earlier, sometimes you have an idea and you're told, you're too young. You won't be able to do it. Now we are told the mindset we've been brought up with is, it's too complicated. You guys don't know how to do it, we're the experts.
Doesn't that mean then, if the developed countries decide, sawa basi, do it, and then you do it, and then you find out that kumbe, the value is not in the product, it's not in the raw materials,
it's in
or
the
knowing how to
value
converting. Even with the value add, let's say for example, even with the value add, the game here is perceived scarcity, right? So if they let go of the manipulation of the perceived scarcity, then
we might end up being woke. A few more people will be switched on. And it only takes one to create a revolution. We won't
suffer the consequences of oversupply?
No, because we'll master the arts. Borrow from their playbook, but only on your own terms. We'll make the rules this time. We won't be playing by anybody else's rules. We'll make our own rules. Essentially, it's just creating one giant barter trade system, where I have this skill, you have this product, I know how to upscale your products. So we have an exchange of resources.
Sawa. When it comes to access to capital, where does the ordinary investor go wrong with borrowing?
No, the problem is the perception in Africa. But a lot of people are now getting switched on. Africa is perceived as risky. You know the image that most, funny enough, do you know Africans are the most educated people on the planet?
Africans are the most educated people on the planet.
They're very bright, by the way. They're so bright.
Most educated?
We like to learn. We know the importance of an education because we know an education will improve our lives.
I have no doubt about Africans' brilliance, but in this case, on what metrics? Let's say, for example,
a hilarious example of, I don't know if I should call it stupidity or ignorance. So, African girl lands on white continent, Australia, my first week in school, all week, orientation week for all freshmen. So, you know, you're all getting to know each other, etc. And this little girl walks up to me. Hi, are you from Africa? Yes. So I hear Africans are monkeys, so where is your tail? Can you show me? I kid you not. And everyone around froze. So in my head, I had two things going through my mind. I had two options. Either smack the stupid out of this white girl, then the optics will be African girl violently attacks white girl for no reason. I chose to go with option 2. You want to play stupid? Let me be stupid with you. I turned around with a fairly straight face. I told her every day, I roll it tightly, tuck it between my cheeks, slap on some tape, and then I get dressed. For a whole year, that girl believed I had a tail. So every time she saw me, she kept trying to see the tail. And every friend I made, they'd be told the story. I'm like, is she an idiot or what?
Guy.
And then when she finally found out, she had the audacity to be offended that I made a joke. I'm like, first of all, you called me a monkey and asked me if I have a tail. Then you're offended to find out I don't have a tail. What is wrong with you?
She was offended that you lied to her that you don't have a tail.
Yes.
Oh, Lord.
Because they believe they even ask, how did you get here on an aircraft? Like I got on a plane at an airport. They believe we live in trees. A lot of them, but they think we live in trees and hang out with wild animals. For most people, Africa is about that dirty, hungry child.
Because that's the image that has been sold to them over and over again.
Can I tell you, Kibera is advanced. Los Angeles has something called Tent City, where homeless people live in homes made out of trash bags put together with sticks. Heri wa Kibera akona nyumba ya matope na iko na DSTV na stima.
So
Hollywood lies, optics.
So for their optics to us is how good they are living.
Dirty, hungry child Africa.
No, it's the reverse.
Then glitzy, amazing things, the American dream or whatever.
But what they show their people about us is
hungry, dirty child that needs your $5 to buy water or build a pump in the village. So investors have actually Princess Caroline actually talked about it, where she said how investors were asking about mosquitoes in Africa. Like, how do we? Most people don't think we're advanced. I mean,
I think when Princess Caroline mentioned
the perception of us is your skin is dark, so appear not so bright.
Oh, so I get it. But now in terms of brilliance comparatively, like in general, I know, and I say this without fear of contradiction, Kenyans are brilliant.
We are amazing.
If you find a brilliant
things
Kenyan,
we can do, if we
massive.
If we were channeled positively, oh my God.
But if you find a stupid Kenyan,
special.
You understand? So should we say there's a balance?
There's a balance, but the perception out there is Africa is risky.
All Africans are that white girl who you met on day one.
that white girl who thinks we have tails.
Yes.
And they want us to show them the tail. It actually sparked a conversation just recently where my friend was telling me how as recently as the late 90s, France had a human museum where you see how you go to the museum or the orphanage to see the lion in the cage, the cheetah, that black people.
There's a black woman, Kwanza, who was actually on display.
Yes.
Because of...
So people can come and see you like a...
Because of how big the Nini was, so they actually had that as
well. They had, where they held live humans, not dead. You lived in cages like the way the monkeys and the chimps and whoever. And then white people paid to come and see black people. I'll send you that link.
Please do.
To the French museum
Please
was
do.
shut down.
Please
they
do.
had a freaking museum where the museum exhibits were black people.
Okay.
That is the level of how they think about black people. And that is why you find, to some extent, there's some sort of level of brainwashing where you feel like your black skin is not superior. When you go to a restaurant, what do the servers do? They'll serve the white person first before they serve you. That's how it seeps into everything, every aspect of life.
Oh, okay.
Yeah.
So now, my reading into the Breton Woods agreement was that...
Africa was not at the table.
It was not at the table. And the deal was...
we ended up under the rules of living under somebody else's rules. They made the rules.
Yes. But when they came together, they rebuilt Europe after the war.
Using resources from Africa.
You shocked me, Nayo. But after building, now they started looking into what to do with the money again in Africa.
So like,
but
you know
the deal
what?
for
Let's
Africans...
Let's make them borrow from us. Let's make them
so the
beggars for life.
The deal for borrowing because World Bank, IMF come from the Breton Woods agreement, right? So the deal with which America built back after the war, France, and Germany paid the fine, actually.
Yeah, they did.
Germany paid the fine. Now let's say French, for example. What French used to build, right? If Africa got the same terms to build from poverty, right?
You know how far we'd be if they let us do it ourselves without controlling us. You know, IMF and World Bank is kind of like the Wizard of Oz behind the curtain, controlling everything. You think it's free will, but there's someone behind who's controlling what you do.
So when
they taught us the art of getting used to begging and not finding solutions to help ourselves. Look at what happened when USAID collapsed earlier this year. Thousands of projects died. People can no longer access ARVs because we got used to the art of handouts. Tutapewa pesa ya kununua dawa. I never thought, what can I do to make this money to be able to buy this for myself? I'm always waiting for a handout.
That you don't depend on. So in terms of the projects that get funded by either IMF or whether we borrow from China, right? Like the SGR, Kenyans will say we don't get value from that. Which one hits us more? The corruption that is stolen or the raw deal that we got from borrowing? You
get hit on all angles. It's not helping you. The hits come from everywhere. The corruption, which made the debt balloon, the raw deal. I mean, look at how our SGR was built. We got refurbished trains. What did Tanzania do at a tenth of our budget? You've seen the equivalent of the SGR.
Yeah.
Brand new freaking trains. Proper. As guys got some refurbished diesel nonsense here that was decommissioned in China.
But then one of our other guests, the CEO for AMG Realtors, Andrew Muthegitau, proposed an idea that I can't get out of my head. He said that if Kenya got light trains, a light train network, your speed trains, that you could actually live in Nakuru
and work in Nairobi.
Yes.
Do you know how effective it would be?
It will spread the city.
Yeah, it will spread growth. It will not be focused to just one
That's
small
a viable
area.
idea. It's possible.
Yeah, and it would help the country grow evenly. Right now, resources are unevenly distributed in our country. Look at life in Nairobi versus life in, let's not go far, Karatina. Or like food. Let's look at food security. Biggest problem we have. Northeastern, they're dying of hunger. Meanwhile, Nyandarua throwing potatoes because they can't consume them and they don't have the necessary ecosystem to sell all of them or even share.
Yeah.
Kinangop, you pour milk. I bet some people in Kinangop live like Cleopatra. They shower with milk because of so much milk. But imagine if we had a system where, because of that spreading out, we know that all this extra food, it can go to Northeastern or whatever.
Yes.
But we are all, again, in our country, we are all little silos, like Nairobi County, Kiambu County by ourselves, Nakuru, Kisumu. Everyone is their own little fiefdom.
Okay.
If we all worked together, we'd be, oof, my God.
And in terms of unlocking value, first of all, I was told M-Pesa looks like a brilliant innovation, but nowadays what people are becoming woke on and it's convenient, but it's super expensive.
It is, because they don't have, what they need right now is competition. They're a monopoly right now.
But I'm told M-Pesa did not work, I heard M-Pesa did not work outside Kenya because...
Remember what I told you when we're setting up banks, the regulations are different. What works in Kenya will not work in South Africa. Go and study the market in South Africa, okay? See what works, then recalibrate the blueprint for M-Pesa to fit the needs of South Africa. Don't go there thinking, because M-Pesa worked in Kenya due to 1, 2, 3, 4 reasons, it will work the same. The reasons M-Pesa worked in Kenya will not be the same reasons it works in South Africa. or in Nigeria for that matter.
Yes.
So you always have to
Mm-hmm.
assess the market. What is the need? What can M-Pesa address?
Okay.
Here it was for the unbanked. Everybody who was unbanked was able to do it. Maybe there they needed to pay pensions.
Mm-hmm.
Let me give you an example. In South Africa, they have their biggest problem with paying out pensions is they don't have a system proper. So imagine you live in Busia, yeah? You have to travel to Nairobi every week, come and collect cash.
Mm-hmm.
Because they don't have a mobile jail, a disbursement system. And sometimes you'll have traveled from Busia to Nairobi knowing every Friday I get paid. So I come overnight from Busia. Then only to land in Nairobi and find, OCG, the system broke, pesa could come on time. You see, you've wasted the whole journey.
Yeah.
You probably don't even have enough money to come back again.
Yes.
And then the other problem is because it's in cash, there's a lot of temptation.
Yes.
You've come to collect the money. This money is meant to buy your food, probably buy your medicine or whatnot. But then, after collecting the money, passed by and saw Shiro's bar. You've gone in and you went crazy. Katy Perry put it in, spending rent money for bottle service. You go have one drink, two drinks. Next thing you're buying drinks for everyone. Umekula pesa ya dawa na ya kununua chakula. You get home una pesa.
Yeah.
Now you're going to starve for a whole week before you come back again.
Yeah.
So we've built a system in partnership with the South African government. That's one of the projects we've done for digital finance, where the money will be received electronically, but it will be coded as smart contracts where a portion of it will be redeemable for food in partnership with specific merchants. So you have your card. Every week you get paid 15,000, your pension. Of that 15,000, 5,000 is strictly for food. And it can only be redeemed. You can redeem it if you walk into a Carrefour, Naivas, a Quick Mart. As long as you present that card, you're able to buy food. So what have we done? We've saved you the headache of, and you won't have to now travel from Busia to Nairobi to come and collect your money. To be digitally paid to you.
That's a classic example, and I think a few more you've given in the course of this conversation of identifying a problem and coming through to solve it. But then now, for the people who judge financial security and financial literacy, there's a word, there's a figure always thrown around. The average American doesn't have, $400 in saving, right? True. For emergency. But then again, you come back, ukasema, someone who has 100K ati imekaa tu kwa bank, the person is poorer than mama mboga. What's the difference between that? Mtu ako na 100K, see, that's supposed
Let me give you an example. Banks like people whose accounts are always in deficit. That's the best customer. Not the guy who's holding 5 million in the account, Aisongi.
What are you saying?
The person who is likely to be given a loan by a bank is not the guy who has 5 million that's been sitting in his account for 2 years. Ajasonga. The person who will get that loan is the guy who today has 100K, kesho ni 30K, next week ni 40, 60, 80, mara he's minus 10, it's 500K. That's the guy who will be given a loan because they know he will pay. It's like the parable of the talents.
Talents, yes.
You were given one, you went and dug a hole and kept it. These others went and did something with it. The bankable person is the one who's always in overdrafts, not the guy who has just zeros sitting in his account.
And how is that different from living hand to mouth? Because it will only take
that person living hand to mouth is the one who keeps that engine running for the bank.
So this person actually works for the bank.
You're working
the person
for the
who
bank.
has 5 million, the person
Sasa where we over 5 million, they'll never give you a loan, but they will play with your money proper to sort out Mama Mboga's problems.
But what is financial security? So kukua sure you can pay your rent for the next 5 years if at all you're not owning a house.
Financial security means different things for people. There's the guy, his financial security is akona 10 million imekaa tu kwa account. Every month your statement ikikuja akisoma anaona credits, the zeros are many. And there is a guy who knows this month at 6 million umefanya kazi, I only have 20k left in the accounts. But I know nikienda kwa bank will look at, hey, this guy this month did volumes of 6M. Patie 15.
Okay.
Because unajua hiyo kazi yake akifanya 15, his 15 will make 20 million for the bank. Will make like 5 million on interest.
Sasa ukijua pesa hivi wewe, what is your view of a job? Like ati niko na job, your view of money is beyond a salary.
I no longer live to work.
That's the second time you've used that statement. The first time ulisema some people live to work.
Yes, and others work to live. There's that person, if they don't work, they can't live.
How do you escape that system? Because most people assume that that's life.
No. Work-life balance. It's for you to decide. It's a personal thing. It's for you to decide what is important to you.
I hope watu wa kushinda na laptop wanasikia.
Is it making all this money? Remember, if you live to work, when you die, are you going to take this money with you?
No.
So why are you working so hard, working yourself to death, making all this money that you can't take with you? Make the money to live, man. Go on that vacation. Take yourself for that dinner. Buy that pair of shoes.
You had to sneak that in.
You know, me and shoes. But yeah, don't work to just stockpile money. You're not going to take it with you when you die. You're not a pharaoh. You'll be buried with your gold in the tomb.
Hakuna hiyo ni kelele.
Spend your money while you're alive. Don't deny yourself. Because you deny yourself, the people who will enjoy are the ones who will cooler your money when you're gone.
So you are not pro-accumulation, because that's also a problem, because our politicians, we are greatest victims.
Yeah, accumulating things you'll never spend. Tell me you've bought 4 million acres of land. What are you going to do with it? It's just sitting there, it's dirt. Just so you can see you have a title deed where you own 5,000 acres worth 4 billion. It's
just in your mind, whereas it's locking value that could actually...
Do you know what you could have done with that 4 billion? Build a residential community that pays you rent. Build a hospital. Build a hotel. Build a school. But it's just some weird piece of land with weeds as tall as you, and you have a title deed in your safe that says you're a billionaire because you own 5,000 acres of land.
Na tena when hiyo example nilikuwa nakwambia Robert akituambia we are risk averse, the banks are actually paying for that, because it's 3 banks that are holding assets worth how many trillions? 170 trillion, 3 trillion. It's a big number of
There's
land
a whole bunch
that
of
they
zeros
can't sell.
that they can't sell or do anything with. So it's of no value to them. It's actually a yoke around their necks. It's choking them.
Na itawasaidia.
It's value that can't help them. It's a piece of paper that says they have this value, and yet they can do nothing with it.
Hi. We've weaved through very important conversations. Before we close this chapter, if you were to speak to someone, the greatest population is watu wametoka campus, they don't have jobs. People logging off class 8 primary schools, they don't know what to do next. If you're speaking to someone directly, how would you advise that they navigate the money system so that they don't get lost qua statistics?
Live within your means.
Everybody says that.
Don't try and impress people. Never be ashamed to say. Don't try and be at the same level as your friend. We have a perfect example in Kenya. We like copycatting things. I opened my car dealership selling Pro boxes. Remember, there was a time every other car dealership was selling Pro boxes.
Yes, fast moving.
Now you flooded the market.
Yeah, Pro box now the fast moving.
Yeah. Or you're seeing me thriving now. But you don't know how long it took to get me here. You want instant gratification. It probably took me 20 years. You're seeing it now, but you don't know what it took for me to get here. You're seeing the results now. So, and then you're thinking, oh, I can do what he's doing. Then it doesn't work for you, you get frustrated. But because you're trying to keep up, you keep getting yourself in trouble.
Because you're using someone else's script.
It's not your script. Write your own story. Don't copy somebody else's. Literally write your own story, find your passion, what you're good at. You'd be amazed what you can do with what you're good at.
Linda,
don't copy somebody, because I know I made glass bottles and I made money. You don't know what it took for me to perfect making this glass. How many trials and errors do I have in a dark room somewhere with me shaping bottles before I got the shape perfect? You're seeing this. You're not seeing what it took to get me here. So you're trying to copy this without knowing the backstory. And that's why we fail. So don't try living somebody else's story, write your own story.
Wow. As a representative of the people who consume our content, to the best of my knowledge and experience, this conversation has lived and blown all expectations I had. And I was right.
I'm laughing. Yeah, the script you said, we went off the script.
As a representative of the people, I know good vibes. So when someone asks for a script, ndakwambia, sawa, tunaweza
speak. I was curious.
Nakwambia tongele. But mimi, when I speak to someone hivi, I always know a click. There's a click that always comes. Najuanga.
I live in storytelling.
Na sisi, I don't even think we exchanged 3 sentences before they told us.
Before they told us, now we need to focus on what we were there to do.
Yes. And I have a feeling this is the first of many conversations. Yes. Ukipata nafasi kwa hizo.
I can't wait to come back.
Asante sana.
There's so much happening in the next few months. There's a project I designed that will be of benefit to not only Kenya, but the rest of Africa.
And we are also actually doing we will be doing our podcast live, and my heart really beats to the sound of you need to be in our lineup, because the concept is very simple. We want people to come. We've received feedback from our audience. Wanasema they want to also be part of the process, so they can ask questions.
Live audience questions. Those are the best. They take you on such amazing journeys that you never thought you'd go through.
We are doing that. We actually released the details. Kama the details will be ready by the time this episode comes out. Tutakuwa tumeziweka hapa. If not, we'll communicate. But I believe by the time this episode come, we'll have the dates and the time, how someone can get to attend, and I really hope we can get you.
I am happy to come and date. Hey, maybe my 2 books will be out.
You have 2 books?
Well, I was in recovery. I wrote a whole 12 series.
Oh, the one you sent me a copy.
Yeah.
But you also write very well on your LinkedIn. Ebu angalieni LinkedIn ya Linda Waiyaki manze. In fact, just to make it easier for you, kwa description ya hii video we have a link directly to Linda's LinkedIn. Storytelling. Click up when
I write stories about my work and my life. So my life imitates work. Like, remember the story I shared with you where my lost phone at a concert turned into a financial lesson.
Yes.
Yeah.
Zote ziko hapo kwa LinkedIn. Very nice. And there's a story of yours that I want us to end the episode and then ask for your permission. If not today, you will tell it to us when you're ready. But mimi nakuanga na problem. Unaona vile wewe ni mnoma storytelling. Mimi mtu akiniambia kitu najua ni noma, ni super interesting, I struggle to let it go.
Which story do you want? How I broke my back.
That is written. This other story, iko na rather sad twist. And that's why I wouldn't ask you.
When I'm ready.
When you're ready. Nawambia that's a blockbuster story, wadau, when she is ready. And just to give you a hint, for wale watu wanajua the areas of interest zenye tuko nazo, when Linda is ready, she will tell us the story. Just to give you a hint, ebuenda tu search JTF2. Ukisearch tu hiyo, Linda atupatie story yake ya JTF2.
Easter egg has been dropped.
Hey, you're fire. Hey!
The Easter egg has been
The
dropped.
Easter egg has been dropped. Your personally, mimi number one,
that
number
one
one.
I'll ask my family if they're okay with me sharing his
When
part
you're
of the
ready.
story.
When you're ready.
Yeah.
When you're ready. I think from me, a special request, if we can package it nicely as a legacy, if you can live through another episode of ours, it's a beautiful story again, shortly told, but the money conversations are totally exhausted.
There are plenty. Like now, I'll be writing that series on the Gulf African Investment Nexus. And we're setting up a new council, Malta Africa Investment Council. Yes.
Okay.
Where we connect Maltese and European investors to African projects.
And people do ask, we have a friend of ours, and I also will try to get him on our shows, and Ed Thiongo. Ed Thiongo is a venture, and I think you
it's
probably
a VC.
Yes, venture. No, he's not a VC. He represents venture capital organizations. But one thing, and I feel like I've let our audience down, for the people who have ideas, to link them to opportunities and alternative
funding
platforms
options.
of funding. Yes.
Okay, so I have something interesting that we're cooking that was born actually this week. I'm still trying to create the framework after brainstorming. We plan to build an innovation hub.
Okay. Wow.
Sort of a regulatory sandbox that allows different African entrepreneurs to play and build whatever projects they have within a safe space with funding and regulatory assistance.
I really, that's good. And that's why you have to, if your schedule allows, to attend one of our events as a panel. And then the reason why I think I've been slow kidogo with that is because I've observed startups. And the same Ed alisema, 98% of startups in Africa fail.
They are just flashy decks on Canva.
Hatutaanza episode ingine hapa. Thank you.
Because for your startup to be effective, you need to be able to answer, what problem are you solving? If you can't clearly articulate to the investor what problem it is you're solving, it's just a flashy deck.
But you can see ideas that can actually fly, that can actually solve problems. Wadau tayarisheni ideas zenu before we meet Linda and the Innovation Hub.
So if all goes well, the Innovation Hub should be up and running by Q3 next year.
Q3 next year. We'll have people get ready. We'll prepare them. After when we do our podcast live, we'll make sure we invite people when you work on a psyche ideas and we can vet them. That's enough time to prepare good ideas.
It is.
Thank you very much.
It was a pleasure to be here. This was fun.
My team knows how much we've looked forward to this episode. Mambia episode inakam. Thank you.
It's just Jack ruined it.